All right, let's try this again. Um, Technical difficulties, so fun. Um, so I think a lot of people obviously are curious what's going to happen to the financial markets. After the COVID-19 thing sort of simmers down and life may resume, resumes as normal as possible. And while there's no one that can, completely predict that, we can obviously look at past events, past recessions, and um, you know, bear markets and things like that, and take some trends about, away from what may happen. Now, one thing is you've got to remember that the stock market is only a piece of the overall picture when we're talking about, economic strength, or um, how strong we are in like a financial situation, as a company, or as a globally. Um, so stocks are, purchased ownership of a company, right? And assets like that typically outperform, actually always outperform cash, right? So there's a variety of different types of assets you could buy, right? Some of the simple ones is like you could buy just some gold, right? That's a sort of considered a currency, or a precious metal. You could buy gold, and basically you're predicting that, or buying gold, so that because it maintains its value. Now, gold doesn't change a whole lot in itself of as far as its value, but the price of gold changes because the economy in relation to gold changes. Get it? So if the dollar gets devalued, gold maintained its value, and so all of a sudden the price of gold went up, because let's say the dollar, if this is the current value of the dollar, and it decreases, it depreciates in value by 50%. Well, that means gold just jumped up a big amount, right? If the dollar appreciates, like we pulled money out of the system, and now the dollar becomes more valuable, or we don't necessarily have to pull the money out of the system, but there are other ways. Anyway, keep it simple. The dollar appreciates. Well, gold became cheaper per dollar, right? So this is sort of how we view stocks as well. So if you own, let's just throw one out, like Amazon, right? Everyone knows Amazon. If Amazon is growing, they're getting more and more assets, they're getting more and more cash flow, they're getting more and more profit per quarter, et cetera. Their stock price is just going to continue to go up, right? Because as these stock, financial analysts are looking at Amazon saying, like, man, they predict they're going to make this much more next quarter compared to last quarter. They're still in a growth phase. Their profit margins are staying high. Like, I'm going to buy because I predict the future um, asset value of Amazon compared to a cash or a dollar value is going to be higher, right? And if it just does that over and over every quarter, quarter after quarter for years, that's where you get Amazon's chart. If you go look at like a 20-year chart of Amazon, it's just insanely steep, and it's consistently up. um, Obviously has been a uniquely excellent company, right? So that asset compared to the dollar value is going up. And so when we have something like this COVID-19 crisis happens, and you basically, we're taking a massive hit as far as like a lot of people are no longer at work, right? So there's this income gap now that has been created in our economy. A lot of employers have just like shut down business for like an extended period of time. Now that's income that business, that those people that were employed there, um, that's income that no longer exists. That's just not a part of our economy anymore. And so there's going to be a shift, right? Um, so the Fed, the central banks can do certain things to sort of fill that gap. They can pump money back into the system. They can print more money, put it in the system. But when we're looking at all these different assets across the country, across the globe, if we pump more money in, devalues the dollar, right? So even though we have this economic crisis, certain stocks, bonds, treasuries, etc., certain things in the assets in the financial markets get more value compared to the value of the dollar. I hope this is making sense, because we pump more money into the economy to try and fill this income gap, which devalues the dollar in relation to other assets. So certain stocks actually went up or stayed up. So if you were watching kind of, let's just say like S&P 500 or Dow Jones, as the COVID crisis sort of came out and there was just news about how legitimately scary and big it was, there's, let's just say the S&P 500 is pretty consistently going up. And then suddenly we hit COVID and it tanks, right? Drops massively. I haven't calculated it, but I feel like it was something like a, 35% loss, something like that. So we basically just dropped a massive amount. Well, fairly quick, like we're still in the middle of COVID, but the stocks have recovered all the way up to within, maybe 15 or 20% of their high. However, certain stocks are actually at new 52-week highs. Amazon is one, right? Netflix went really high. Shopify is going nuts. Like a lot of stores and companies that online services actually is their bread and butter. That's just cause for them to be even if they don't make as much money this quarter as they would have without the COVID crisis, this still is a plot, this new way of life that we see of more virtual business and things like that, plays into what they're doing. And so as an analyst, you're going like, okay, well, that's where the best assets are, right? In relation to a falling dollar. Does that make sense? So in 2008, when the people that ran away from the stock market completely pulled their money out at the exact wrong time and never returned, first of all, they pulled when it was down, and they missed an immense growth in the time after that. So I don't know if we're going to have another, like a second dip. A lot of times that happens after a crisis. You'll get sort of maybe people think we overreacted. So they go, okay, this is time to buy, and it goes back up, seems to be stabilizing. And then quarterly earnings start coming out, from this time frame where the COVID was the worst, and companies suffered worse than we thought and all this stuff. And so then the news sort of turns to that, we get another dip. But over time, the stock market basically does better than wherever you could put your money, right? Especially cash. Cash doesn't do well. And in a recession, we typically pump more cash in to fill those gaps. And so you don't want to have been in the stock market, it tanks, you pull your money, and then they pump more cash in to fix that problem, or at least prop it up, which then devalues your cash. So you had a devalued stock, assets in the stock market, pull your money, then your money gets devalued because of what the central banks do to prop up the issue, right? So these are some interesting things to think about as you're trying to make your financial decisions going forward. The stock market's going to be fairly volatile for a while. You can probably, expect that it'll be going up and down. Who knows when COVID will go away? Who knows if it will go away? How we're going to react? How long it'll take to get vaccines, created, testing properly? Like so many factors that we don't know. And that's just the COVID thing. We don't know what else we don't know. There may be natural disasters coming. There may be political turmoil, like we don't know. So we can probably expect some turmoil in the market, but overall, what we're trying to find is like which assets are going to hold value better than a falling dollar. So anyway, just a few things to think about. I spent some time listening to Ray Dalio recently because he's kind of one of the main authorities in things like this, which I would recommend you go check out his YouTube video called "The Big Economic Machine." It's one of the best descriptions of just like I think it's like 20, 30 minutes long. The best descriptions of like financial markets and how people, income, debt, central banks, local banks, business, availability of cash, like all these things kind of work and manipulate the market, and that's what makes it, right? That video will explain to you kind of like that debt is actually a currency, right? And so there's some things that that your standard person didn't really learn in school that video will help you understand better as you're trying to predict what to do with your money in a really strange time. So anyway, thanks for watching, guys, and I'm sure we'll talk about this again in a future video, not too distant future video. But anyway, thanks for watching. Adios.